Okay, now, amidst what you're looking at there, maybe a little bit of weakness in the tech space as we get underway this Monday morning. There is just a flurry of news that we've been talking about really the last couple of hours or so. Internet and tech. You had the NASDAQ, if you missed it last week, underperforming. You have the latest here in Oracle and TikTok. Our next guest has published hundreds of articles on tech and startups. Joining us now from San Francisco, Beth Kindig, lead tech analyst at Beth.Technology. Beth, finally, pleasure to have you in the program. Good morning from Asia. So, I was hoping that we could start off just news of the day here. When you look at the valuation of the Oracle TikTok story, $60 billion, is that cheap? Is that just right? Is that expensive? And do I also need to rethink assumptions on growth for those U.S. assets?
At a $60 billion valuation, I would love to have a stake in TikTok at that level. If you look at the current revenue, that might be pricey. But with these high growth companies, it's really important to look into like next 12-month revenue, 1 year forward revenue. TikTok right now has about $1 billion in annual revenue. It's going to increase to about $6 billion. So at 60, at the current valuation, it's trading at 10 times forward value. That is a great deal for that company, especially when you look at monthly active users.
I would assume then that.
Yep.
Yeah, I was just about to say, monthly active users, I would assume nothing then changes in terms of fundamental assumptions on growth. That takes us, I guess, into the broader story. I mean, NASDAQ last week and the week before, a week prior, underperforming. It could be the end of the growth versus value stock. Who knows, really? But help us understand now, for investors, the tech trade, the internet trade becomes a little bit more nuanced. What would you still be buying at this point in time?
Zoom video to me is sitting right under everyone's nose. I mean, this company is almost 10 years old and it was already firing on all the cylinders, 100% revenue growth. It re-accelerated to 350%. I mean, we haven't seen this in your lifetime or my lifetime, and we may not see that over the next decade. That is phenomenal product market fit. It's because the product is so viral. I mean, that's a big number to put up. So for me, it's sitting right there in plain view.
Beth, how important is it to break down these tech sectors now into certain categories, and which categories are looking more attractive as there is this concern over stretched valuations in the space?
Yeah, I think one thing to just keep in mind is that technology is really central. We're seeing the world's largest economies fight with tech as the battleground. We're seeing TikTok, we're seeing semiconductors, we're seeing 5G infrastructure. So to compare it with the dot-com boom and bust, those valuations, it's actually not a great way to look at it. So when I look at portfolios right now, you definitely want e-commerce in there. Telehealth is taking up so much market share from the healthcare industry. It's, patients, doctors, healthcare systems, everybody is pushing hard on telehealth. Cloud, there's essential cloud. A lot of companies are migrating from cloud, from on-premise to cloud. So you want to look for hybrid plays there.
Does optimism and movement and progress on vaccine development potentially take the wind out of the sails of some of these tech names, semiconductors, hardware, as Goldman Sachs has suggested in a recent note?
From my perspective, again, I'm from San Francisco, Silicon Valley. Tech is running the world. It just knocked out oil over the last 10 years. The entire top 10 world's most valuable companies are loaded with tech. So I don't see a future where tech is going to decelerate. I think it's only going to grow. Every company is a data company. Every company is a cloud company. And if they're not, they're migrating to the cloud. When you're running every single industry in every corner of the world, for me, I remain very bullish on tech, and I think telehealth is going to continue on the tear with or without a vaccine because people have gotten used to this convenience. It lowers costs. That's a great combination.
I want to ask you about semiconductors, semis. I mean, you broke down some of these different areas, of course, within the tech space. And it's kind of funny, Beth. It's 2020 and people seem to be lumping the tech concept within just one. And there are, of course, bits and pieces below this. Talk to us about what you think about the semiconductor industry. Does that outperform cloud, for example, moving forward? And if it did, if that's your assumption, what would be your top pick?
Yeah, semis are really interesting because I think we're in the middle of a real big hype cycle on cloud, and I think semis are starting to gain strength. So if you're looking 10 years out, semis right now are undervalued because they're going to be running artificial intelligence. And to put it into perspective, mobile gave us Apple, Facebook, Google, and artificial intelligence is going to be 4 times bigger market than mobile. So we're going to see some really big, valuable companies come out of semiconductors. They're going to be running all AI. I mean, I love NVIDIA. I've been writing about NVIDIA for many years. AMD is super interesting, the way that it's been coming up against Intel. Those are just a couple of names that come to mind. But when you're running AI and it's going to be a 4 times larger market than mobile, it's something to pay attention to.